Welcome into a brand new episode of WSI TV. Enjoy the show.
Hi guys, welcome back to WSI TV. Today we're going to be doing another episode of Jim's Market Update. So of course I'm joined by Jim Sampson. How are you doing today?
Good, how are you?
Awesome. We are going to be looking into the market just as it's been going the past week, and then we're going to look into the future. But of course, before we do get involved into all that content, I want to remind you to go to WSITV.com. There you can sign up for our free daily newsletters and you get instant access to the WSI vault. So I think today we're just going to jump right into it. We did see on Friday's close that we ended a 4-day winning streak in the S&P 500, but what is it you're looking at in the market right now?
Well, it's kind of more of the same, only the correction actually wasn't as deep as I would have actually liked to stay on a healthy sort of track. In fact, I mean, really the upwards trend doesn't look at this point, really even that broken. I mean, because of last week's action, it's just come right back in there, flying high, and it still needs more of a healthy approach. But this market has a head of steam on it. We called it to be a brand new bull market back on September the 9th, and that prediction hasn't let me down. Which is more in a steady fashion. I hate to sound like a broken record saying the same thing every week, but it is what it is. And I'm not trying to give you any sensational headlines like I think the mainstream press has been doing over what was just a blip that didn't even put a dent in it. So I'm not going to do that. I'm just going to tell it like it is, and there it is right now.
For sure, yes. And while we are still kind of riding that high, even though it's not necessarily what we were expecting, we did see obviously earnings season is still going on, and we saw that big tech, mainly, they kind of made a splash. We did see mainly social media companies. They kind of brought in mixed results, which is kind of interesting seeing as how prominent they are in just society and in the market. We saw that Facebook and Snap, which is the parent company of Snapchat, kind of disappointed where Twitter excelled. So it's kind of interesting to see that dichotomy between similar stocks, even though we have this rally still continuing.
I mean, Facebook's obviously doing very well. It's one of the so-called Fang Stocks. I mean, the thing that always has concerned me, I hate to sound old-fashioned, but the thing that's always concerned me about social media stocks is that it's such at the mercy of this fickleness of society, and how the shoal of fish can just flip this way or flip that way of what's cool or what isn't. And then you obliterate a business, which is why Facebook does things like branching out, and there's you've got to have their hands in different pies, so to speak, and there's YouTube and the ownership and stuff like that, and like Facebook, and Twitter and so on. So and that's really why I think what's going on there is not so much about trying to dominate the space as hedging their bets. Trying to, because of that. I know Facebook, for example, I've got a 20-year-old son at college, and he's like, he won't touch Facebook. That's no longer cool. Which is interesting because, but the people who are using it now are the people who've got money to spend on advertisements and stuff like that. So you've got an older age group. So it's a very interesting space. But the Fang stocks, and I know there's another one added now, we think it's Microsoft and so on, but so the Fang stocks, whatever you want to call them, are all flying high. I mean, Netflix is just come out of the dust, and so has Amazon. Amazon's doing well, obviously, but it had a little flat phase, and they're all doing well. So that's a very good sign to confirm this market, because they've been the market leaders of this hugely long bull market that really began in 2009, albeit with a few interruptions. And they are confirming everything.
For sure, yeah. And I mean, I know you specifically do look into things, how, especially when they're going to change as we're coming into the 2020 election. There are, of course, going to be, hiccups, whether we do have a change in regime or we don't. But due to prior antitrust concerns that we did see in social media stocks just in the past year even, it does kind of warrant some concern for their longevity, I think
that, and I think they've had a kind of, either implicit or explicit warnings from the administration about, or just people in general, I think, are sick of what's fake news has always been around. It's just that now we're giving a name to it. But I think they've had a warning, and they know they see the writing on the wall. They know not that they're playing with fire if they try and upset any election results, etc. And also, but the other thing is that all any administration wants is a second term, and so they're not going to do anything that's going to upset that. So as long as everyone's in their box, I doubt they're going to start any antitrust lawsuits. The time to be worried for Facebook and and Amazon and all the Trump haters in that tech space is going to be after the election if Trump gets in, because that's when that's when the hammer's going to drop, and that's another reason why they know to watch their P's and Q's coming up to the election. They're not stupid, and they know, and that's the reality of life.
For sure, yeah, and we have seen quite a bit in terms of the market. We are looking in terms of President Trump's, reign in the office, and that it was campaign promises. And speaking of campaign promises that he has tried to fulfill, we did look at China, the trade relations that we were going in between after we had that phase 1 agreement back in late 2019. China is still set to cut tariffs on U.S. imports. It's about $75 billion worth of imports that they're going to cut down on.
Right.
And we are looking into phase 2 talks, but of course those are on hold with the coronavirus shutdowns.
Right, and that does weaken China's hand even further. We discussed in a previous episode about how how America's stock market is so much stronger than China's stock market. Now Trump said that, and he's absolutely right. Who has the upper hand in any negotiations here? And that coronavirus thing is obviously a terribly sad situation. We hope we work hard to get a cue for, which appears to be happening. But meanwhile, even if they found it's all gone today, then China, the damage to the economy that has suffered already it weakens their hand even further, and strengthens Trump's.
Yes, that is definitely something that we're going to be looking into as it is trying to come to a resolution. But kind of switching gears here, we are looking at the current U.S. economic expansion is actually the longest on record. You did just mention that you believe that the bull market has been going on since 2009. But so obviously we looked at the slowing job market that were in the headlines and the slowing overall growth. It obviously didn't hinder this bull rally, and the correction that you mentioned earlier is not nearly as intense as you had expected. So coming into obviously this new year, we are still in the very beginning of 2020. What are you expecting to happen for the economic expansion?
Well, I mean, it's hard to predict things like the economy, and if we take a more of a longer term view outside, say, 1-2 years, there's a lot to be negative about, actually. If you were looking at the fundamentals, then a lot of this actually shouldn't be happening. We've still got, really the problems of the 2008 financial crisis never got solved. The debt really never got paid off, and you've really just kicked the can down the road in style. I think what has saved the impending disaster, or pushed it down the road a little bit further even, was actually Trump's corporation tax cuts. That is bound to have given. I mean, you've suddenly looked at, slashing the tax burden on corporations by a third. That's going to do something to, corporate bottom line. And that's what that's been reflected in the stock market. And the fact remains is that a healthier corporation should mean more job security for people and things like that. But what's challenging that is things like technology and so on. So what you're seeing is this I think a two-tier situation where, and I think this is going to be a theme of the near future actually, where you've got stock market flying high, average person in the street plateauing in terms of their lifestyle, and that's an unfortunate reality of what's been going on here. But that's a long story for another time altogether.
Yes, but I mean, speaking of kind of just your personal wealth and trying to move with the technological trends that are happening, I know you personally are very bullish on cryptocurrency.
Right.
And we are looking at cryptocurrency kind of just because it's not been as popular recently. We haven't been hearing much about it. So what are you thinking for cryptocurrency right now?
I mean, cryptocurrency is the way of the future. It is going to be such a disruptive technology. It's not just a way of paying, it's a way of actually, automating businesses, and it will sacrifice a lot of staff in the process. We look at Bitcoin as being, the sort of leader of the complex, and it's been, very up and down, and it looks like it's just having a resurgence, actually, making a big comeback there. The world, the governments especially, are scrambling to keep up with the disruption this is going to cause. Corporations, everyone's still trying to get ahead of it. This is comparable to like the mid-90s when no one could figure out what the internet was and what a website was, and it's exactly the same thing again. It's going to be the Wild West. The difference this time, though, is that Bitcoins are a direct threat to government control and currency. So that's why you're having these regulation issues that does create new levels of risk with things like Bitcoin, because they're not going to want to lose, a government's control is the money supply. That's how they control the population, and Bitcoin's a direct threat to that. So it's going to be a volatile one, and there's going to be winners and losers, but right now this is the one, we would look at. And because of that government risk, I think I'm more interested in things that are more corporate solutions, such as Ethereum, more actual application-based cryptocurrencies that solve problems, give cost efficiencies to businesses, rather than just money replacements, which is really what Bitcoin is.
For sure, yes. Yeah. And we are looking at the fundamentals of what's actually influencing cryptocurrency, because it doesn't move in the way that the majority of securities that we look at do, that we're used to. What financial factors do you think coming into, of course, this year and longer term are actually going to either influence a cryptocurrency rally or perhaps a drawback?
I think it's going to be, well, obviously all rallies is going to be the public and how much the Wall Street can start pushing these things. The trouble, what's slowing it all down is that you see one of the biggest people who are threatened by cryptocurrencies is the banks, and Wall Street is the banks. So they're not going to get behind something that's going to put them, banking, out of business until they can control it with their own things like Ripple, which is a bank-backed cryptocurrency. They need to dominate that space. So that's what's going to hold it back. Once Wall Street can find a way to control the situation and make money from it, rest assured they'll talk the public into getting, and we will have basically the dot-com frenzy again. That will be that, So it's really a function of, again, it's not that the technology isn't there, people can't do it. It's getting the people who count the establishment behind it and figuring out how they can make money from it.
For sure, yes. And speaking of things that Wall Street can control, we are looking at some very specific sectors that are on the rise right now. I know you personally are very bullish on real estate coming into the future, but I've also looked at healthcare and technology. So up here I've got healthcare technology, and then real estate for you. So
real estate from a personal point of view, going off of the stock charts, and you're owning real estate or buying and selling real estate, I think things are pointing to 2021, even 22 even could be the peak of this cycle. I think it's going to be a good few years for real estate, which in turn could reignite the retail sector. That's that. Talking about the average person in the street not feeling wealthy, that could give them a kind of wealth sensation. Even though I feel like my house is worth more, even though I haven't got more money, I feel wealthier. But the chart is telling the tale here. Really, it's the technology sector that is flying high there, and so you have to go by that. Very strong correlation with actual S&P 500 there, and say technology is the best of the three, but all three looking very healthy.
For sure, yes. Well, thank you so much for that insight. If you have anything else you'd like to add before we sign off.
I think that's it for now. So
awesome. Well, thank you so much for being here, Jim. We do appreciate everything that you said today, and we look forward to seeing you guys again soon.
See you next week.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.